The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 20th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. And, of course, let's begin with our empowering beliefs here. And those beliefs are become your own electrician, the electrician of your beliefs. Why? Because beliefs, they've got the power to create, and as you know, they do have the power to destroy. You and we've got the awesome ability to take any experience of our lives and create a meaning that either disempowers us, no, none of us do that out there, or one that can literally save our lives and empower us and take us to places that we have never even dreamed of, folks. Think about it like this. There's only one thing that you can control in life. Only one thing. The meaning that you give to something. And that is truly the beauty of the markets that we trade. We've got bulls. We've got bears. One that sees an event is a selling opportunity. One, a buying opportunity. Your beliefs, the meaning that you give to events, to statements, to anything in life, you are the one in control of that meaning. Pretty cool, especially when you take the responsibility and when you really think about it. Why? Because what we can or cannot do, folks, what we consider possible or impossible, it is rarely a function of our true capability. It is more likely a function of our beliefs about who we are. Each of us struggle with that from time to time. None of us. It's just part of circumstances, folks. But here's the cool thing. All breakthroughs, all personal breakthroughs begin with one thing, a change in our beliefs. And the question is always, so how do we change? And I found the most effective way to change is to get our brain to link and associate massive pain to any disempowering belief that we have. We must believe at our deepest level that that belief has cost us in our past, that it will continue to cost us in our present, and ultimately will only bring us pain in the future. Create as much pain as you can, folks, when it comes to that disempowering belief. Why? Sometimes knowing what we don't want, well, it's just as important as knowing what we do want. I think knowing both, though, that is really the key, because once we rid ourselves of that disempowering belief, it must be replaced with an empowering belief. We must associate tremendous pleasure and link that to the idea of adopting a new empowering belief system. Lastly, you and I must know that at any moment, a decision that we make can and will change the course of our life forever. Could be that next person that you stand in line next to, maybe sit next to on an airplane, the very next phone call that you make or receive, the very next movie you see, the book you read, the page you turn, could be a class that you take. Any of these things could be the one single thing that causes your floodgates to open. And then all of the things that you've been waiting for will all of a sudden fall into place, folks. Make them fall into place. Become your own electrician, the electrician of your belief system. Let's go see what the electrician of the belief system of this markets are. Right now, we've got the Dow. It's trading up a full 9 points. Trade out at 15,977, 16,000, oh so near. The S&P, it is trading up 3 points. It's trading at 1791. Composite up 9 points right now. Trading at 3940. Actually, the lead dog in the hunt on the way up. Russell 2000 up 2 points as we speak, up 0.2%. Apple's back $1.25. Leading the charge, the upside is Priceline. It's off to new levels, new highs. It's trading up $40 right now. That's up 3.5%. Netflix, that's up $6 and change. Regeneron Pharmaceuticals is up $5 right now. Intercontinental Exchange ICE, that's up $4.5. You've got got Energy Transfer up $4. Biomarin Pharmaceuticals, that's up 4. Bib, Biogen, BIIB, that's up $3 right now. John Deere and Company, they're up 2.5. Herbalife up $2.40. Lazy Boy, not lazy. We should take a look at Lazy Boy out there. It's up $2 and change. To the downside, Smucker's Jelly and Jams, they're leading the charge. They're off $5.60, off 5%. Proto Labs, PRLB, down 5%. Ashford Hospitality, not having a very hospitable day, it is off 31%. Maybe that's a spin-off. Maybe Ashford Trust completes a spin-off. Okay, so maybe they're having a pretty good day after all. Tesla Motors down $3.70, trade at $122. Vauxhall Jet off another $3 here this morning. They had a tough day yesterday. They're down, trading out at $54. Boeing off $3. Our call-in number 877-927-6648. If you give me a call, would love to hear from you, and we'll take a look at your stock chart. Let's start off by taking a look at. I'm going to flip back and forth between a couple of my charting packages that I use out here. Yesterday, I showed you one of the tools that I have developed for my clients out here. And really helps each of us to understand where are we at in the markets. We're all visual, and so I've just made things relatively simple, taking a complicated task and making it simple out here. But if we do start off with the New York Stock Exchange, and we should, because it's a wider swath of the market, it's trading at 10-154.51. Now, bears have firm control of the New York Stock Exchange. Nasty day, not point-wise to the downside yesterday, but when you take a look at the volume oscillator, price oscillators, bears have control. No questions about it. The bulls, in order to get control of the New York Stock Exchange, need 1,295 or more net advancing issues. Right now, if we take a look at the NYSE, it's trading at 10-154. It's up 18 points. We've got net advancing issues of 500. Now, when we take a look at the bears actually having control of the market, and we look at the New York Stock Exchange, and we look at the massive destruction that they have been able to create on the NYSE, what do we see? We don't see massive destruction. That's the deal. We don't see any kind of massive destruction. In fact, what we see here is a 3-drive to a top reversal pattern that has failed. And we learn a lot from failure. Yesterday, New York Stock Exchange tried to get back inside it. It couldn't. It rejected that level. That level being the October 30th swing point high. That price being 10-127.63. Now, we've only seen a test of it once. In order for this to really become support, it would need to be a test 3 times. Does it have to come back and test it again? No, it doesn't. But we saw a test yesterday. It was a failure, which is interesting. To have the price oscillator, to have the volume oscillator be below zero, to know that the bears have control, and not be able to at least make a move into that level has to make you say, something to think about. At least it makes me say, something to think about. So no real destruction out there inside of the wider swath of the market, inside the area where the bears absolutely have control, and that's on the NYSE. If I put this other tool up on my screen, let me switch over, let me find it. Here we go. We put this up here. What we'll see, the light blue areas, by the way, I'll just tell you what you're looking at. If you're watching us on Tiger TV, thank you for doing that. If you're listening on your radio and your mobile device at TFNN.mobi, we appreciate that so much out there. Remember, you can catch the archive of this show on Channel 10 and the live stream by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 smartphone devices. Click on that. The show will stream live to you. The red areas that you see on my screen, those are bearish looking. That is when you've gotten some sell signals for sell, or like Basil, like that, but Basil calls sell modes. That's a sell mode for sure. If you're watching on my screen out here, when you get to the dark blue, maybe it looks kind of purplish for you, that is when you get into a buy mode. Now, this is using a momentum system that I have created out here. I have found this to be the most reliable, useful tool of anything that I have learned out there, which is always amazing. I wish when I started this that I would have learned this tool first. Nonetheless, it took me, 15,000 hours or so, and a lot of money to create it, but it is a invaluable tool out here. Now, when you go from purple to the light bluish color out here, you are in super bullish mode, and this is with regard to any market, any time frame or what have you. You go to yellow. Yellow just means caution out there. It doesn't mean tighten your stop. Well, look, you should always have stops, but you should have wider stops while you're in a bullish mode, shouldn't you? And you should have tighter stops when you get to that caution area. And you can see right now with the New York Stock Exchange, even with the bears having control, because they do, at least they do through the day right now, we're still in the extreme bullish camp out here. We haven't even in the New York Stock Exchange hit the caution sign, the yellow area out here. So that's why when I take a look at the markets, when I take a look at 3 drive to the top pattern failing out here, look, things can change in a heartbeat. Right now, what time is it? It is 10:16. At 10:17, everything could fall apart. And what we have to do, though, is use the information that we're looking at here right now. Now, another key area inside of the New York Stock Exchange, really 2 levels of potential resistance out here. You had the bear sash candle. That took place on October 30th. Now, you've got all these candlesticks that I have marked out here, and this is using a little bit of a what we'll call a non-strict criteria, so it's a little bit liberal in its meaning. Nonetheless, these are still excellent tools for being able to identify what these candlestick reversal patterns are. They are reversals, the ones that I'm showing up on my screen out here. If we take a look at this bear sash candle, the high of the candle on October 30th, that is a first level of support, and that is at 10,127.63. So far, that has held. If that area fails, the next level of support, well, you got this bearish engulfing candle from November 17th, but it's really the high of the prior session, November the 6th, or did I say November 7th is the bearish engulfing. November 6th out here, the high is 10,083.47. That really becomes your area of support out here inside of the New York Stock Exchange. So for the area where the bears have the most control of, right now it's somewhat suspect of that. In fact, I would say they really don't. That's on the New York Stock Exchange. Let's go take a look at the Let's take a look at the NASDAQ Composite. Now, it's a daily chart that we're looking at. Inside the NASDAQ Composite, you can see here, NASDAQ is trading out right now at a price level of 39.4160. It's up 3 points out here. NASDAQ, as we can see, has moved into the cautionary sign. Now, the NASDAQ has absolutely led the markets up. This is a daily chart that we're looking at. You got a nice key reversal session and bearish engulfing candle that formed on November 18th. That becomes a resistance level. So for the market to break out, you're also going to see the composite need to get up and over, close above 39.94.97 out there. That is on the composite. Right now it's trading out at 39.41. So it's in the cautionary zone here as we speak. Cautionary, getting ready to slip to will eventually slip to a sell zone if this thing doesn't start to move north. Now that's on a daily chart out here. If we take a look at the weekly time frame on the NASDAQ composite, it's actually in strong bullish camp out here. So the weekly has not given us a signal to go ahead and do anything other than stay inside of the stay on the gas out here. So very strong bullish mode inside of the composite out here. The trend being your friend. You know, even on the daily chart, you'd really want to see a significant. You want to at least see the cautionary sign get flipped here inside of the NASDAQ composite. And that would take a close here this week below 38.99.31. Right now it's trading out at 39.42. Right now Dow's up 16, S&P is up 3, silver down 17 pennies, gold off 15. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 40 points. S&P is up 7. Composites up 17. So the market, as we were going into that break, was starting to break out a bit. But and I'm long the ES Mini, by the way. I took a long trade, but I have just tightened up my stop substantially out here. Let me tell you the reason. Now, I like the price action that we're seeing. This is a 30-minute chart that we're looking at on my screen out here. And if you caught the first hour, I went ahead. I've built a system here to go ahead and put in the primary trading range boundary lines out here. And during that first hour, I said, hey, if in fact we get a close above, we're not getting a close above it just yet. The 1791, 75 ish range out here, that would suggest that we would see price move up to about the 1805 range. So you can see we're just flirting above that area right now. Now, that is a positive for sure. Secondly, if we take a look at the swing point that it's taking on, it's one from 11 o'clock in the morning, so it's a good active swing point to take a look at. This is from 11 o'clock yesterday morning. It moved into that primary trading range boundary line. It did it with 124,000 contracts. Right now, we're at 10:25. We have 5 minutes left in the trading session. This 30-minute trading session, we're already 185,000. So it's taking on that swing point with more volume. What does that mean? Well, number one, it means you'd like to see a close above the top of that swing point, which is 1790. Coming into that area is positive. Now, it's also coming into the swing point high on the 30-minute chart. And that's a 10 a.m. Swing point, and that's got 209. 209,000 contracts. So 209,000 contracts with 5 minutes to go right now. We are at 187. It can certainly do that. So coming into that level with volume is positive and says, okay, a test of 1793.50 would be in the card. So I haven't adjusted the my exit on the top side, which I have set right here below the 1805 level, which is that next primary trading range bound. Now, this is on short-term intraday trading out here. But what I am also really concerned about here is just simply the move inside of the euro-Japanese yen currency pair out here. And so if we take a look at that, because what I do know about that currency pair is that ends up painting the direction of price inside our markets out here. And as I switch back and we take, well, actually I don't think I even need to I don't think I had to switch back out here. And somebody says that's an announcement from Mario Draghi or something like that out there, another QE to infinity. But again, all I'm doing is tightening things up here. We can see the euro-Japanese yen. We're seeing it right now. It's pulling back while our markets are going further north out here. It just says be cautious, which is what really all that I'm doing out there. So I've got a nice little tighten the stop in place so I can't lose. All I can do is make money today, and the question is simply going to be a matter of how much, and that's certainly what we like to do. In this case here, if we take a look at the euro-Japanese yen, it's back down around this little swing point from about 9:30 in the evening last night out here, and it's moving down in towards the over. So maybe that first reaction is not the proper reaction. We'll see out here, but to me, when I see these two things moving in the opposite direction, it's something that I pay attention to out here. And what is nice is just simply that this is moving towards an oversold level out here, which means that, okay, it can either move sideways or it can begin to bounce, not just yet, but here within probably the next half hour or so. So if you're long, I say, hey, just be careful because we've got something that is diverging in the marketplace when I take a look at that movement inside of the U.S. futures, and that may have been an overreaction. And we can see right now this primary trading range boundary line holding here. In fact, okay, there you go. I'm stopped out now for a nice little profit out there. And that's just simply the way it is. I'll wait for the next signal to potentially come in. But looks like, potentially an overreaction inside of the market out there. Now let's continue. So I just wanted to bring that to your attention. Plus I was managing my trade while I was on here live. So let's go take a look at the actual currency pairs. Let's go see what the larger currency pairs here are doing. Let's take a look at the Great British Pound, and we'll take a look at the Euro. Great British Pound, U.S. dollar, we have shown this consolidation box here. It still wants to travel to higher price out here. The higher price taken into about the 162.6 level. Let's take a look at the retracement off of its last high to its low out here. You can see that it's hit the 0.786 retracement level. It has done that here this morning, doing it with a pretty decent bar out here. It's inside that swing point from October 23rd, so higher price could be higher price is in its is the mode that it is in right now. I'll get it out of my system. It is in the mode right now to move up to about the 162 level. Right now we've got the Dow is up 26, S&P is up 5, and we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 24 points right now. S&P is up 5. The euro here, euro-US dollar getting hammered here this morning. I don't know what the comments were made by the ECB. I saw maybe somebody at the den can tell me, just update, maybe you put it in there and I didn't get a chance to see it. We can't see on the 30-minute chart here, euro-US dollar at the low of its session here today, trading at about 134.61, getting into that extreme oversold territory out here. So shortly it needs to start moving sideways. If we take a look at the daily chart for the currency pair out here, what we'll see is today's session here. Now, you're seeing what is an outside day, not a key reversal session, because the market just simply was not stretched in any fashion that I can see. But you can see right now what the euro has done, and it's going to the real key area for support inside the euro is going to be this black horizontal line coming across my screen that was set up by the high on June the 18th out here. That level is 134.14. A nice bearish engulfing candle on June 19th out here. We saw that high get hit with a wide-ranging bar on August 20th. And what we see here is a little piercing candle on August the 21st. So really set up a nice level of resistance. That level of resistance broken by Uncle Ben Bernanke out here. That was a nice wide price spread move on September the 18th. We saw a price come down here with some wide price spread on November the 7th. That level held, so should be a strong area of support Again, that is somewhere right around the level of 134.14. Boy, if it breaks through that, what it sets up then is an A to B equals CD down. If we take a look at that A to B equals CD down pattern, that potential, that would say your 1-to-1 would take you to about 1.3063, more likely 1.2923, or even all the way down, make a 1 to 1.618. A to B equals CD, and take you all the way back down to the lows on July 9th out there. So now as we come back here, as we're on here, I'll go back and flip over to that ES mini chart out here, and you can see this area here. This has acted as a very strong, this blue line, the 1791, 50, 75-ish range out here, has really acted as a strong area of resistance. And so even though the attack was on from a volume standpoint, swing point-wise, 213,000 contracts were going into that 209,000 contracts. You can see that thus far, a smart move of mine to go ahead and take my stop and tighten it up just simply by being able to pay attention to the correlation with regard to what was going on inside the currency pair out here, because we had our futures moving north and we had the euro-yen moving south with conviction. And that said to me, okay, something's not right in paradise. And time to just simply go ahead and tighten up that stop and then look for the next trade out there. Now, the reason that I didn't take the short side of that trade, well, there's a couple reasons, but one of them was this was moving into the swing point with volume out here. So I'd like to see it come up into this area here on light volume inside of this trading range out here. And then that would be a little bit of a different story. So we did have some nice movement into that 10:30 time frame out here. So that's on the ES Mini on the 30-minute chart out here. Let's go see what kind of damage is being done to gold out here this morning. It's off $11. We switch over to the gold contract. This is the continuous contract. And gold here earlier this morning taking out the November 12th swing point low. That is 1260.50. Now, contract-wise down there, 98,900 contracts so far today. 123,000 contracts. So we saw a quick little bounce in Goldilocks as it came off of its session lows, but it's moving into the bottom of that swing point with volume. It's also moving now into the October 15th swing point low with volume out there. That says that the 1251 area should get tackled. And if we see a close today, just simply if you see a close today below, for any reason, the 1251 area, that'll set up a visit to June 30th, 2013, 1248 to 1179. So you've got gold moving down with volume. Let's look at an intraday chart out here. Let's see what we've got going from a bounce perspective out here. Let's go to a 30-minute chart. Maybe we'll even go to a 15-minute chart, see what kind of pattern it is that we have. So nice wide-ranging bar, most certainly, as it came off of the low out there. That was with 19,000 contracts in that 10 to 10:30 session out here. Let's go take a look at, let's change this time frame. Let's go to a 15-minute chart. Let's see what kind of patterns maybe we're forming as gold was making that low. See if there's anything that sticks out. There is nothing right now that sticks out at me there, but you did have some nice volume as it came off of the highs out here, but still too much volume. If it cannot hold the level of 1256.20, that's the low of 1030. That'll be a great indication that actually gold wants to trade lower today. This here, you had some nice selling, came in at 6:30 this morning, so there are some sellers out here. There was, this again, a 15-minute contract. You had 8,000 contracts at 6:30 this morning. Let's go look at silver, see what silver is doing at the moment. It is now back only a nickel, so really kind of an unchanged day out here. But silver here breaking that swing point on October the 15th. And let's see if there was any kind of intra-session reaction as we saw with gold. Yeah, with silver, we saw the same type of reaction here on the 30-minute chart. Let's see what kind of volume we had here on silver. This was a little trying to break out with about 5,200 contracts. Same seller at 6:30, but only 2,000 contracts to the downside out here inside of silver. But silver, so far, having broken its swing point yesterday, not a very bullish sign. Light sweet crude right now, if we take a look at light sweet crude, you've got that just really traveling sideways, $93.69 out there. You've got where I just lost my my train of thought. Not a good thing to do while you're doing the show out here. I'm watching, Obi-Wan is saying that tapering is on the table out there, and that was freaking out the market. Let's go take a look here at, let's go see what's going on around the world. We haven't done that yet out here. We take a look at the Shanghai. The Shanghai here yesterday, boy, nice bullish move here. This yesterday was had some pretty decent volume as well. No wide price spread or anything, but you've got the Shanghai. Looks like it actually wants to try to move up. Let's one thing at a time. First, it has a little Gartley buy pattern, and let's see what type of retracement it's done off of that pattern here so far. So it's above the 0.618 retracement level, 2302. Says 2335 is next on its cards out here. So that'd be about a 30-point move. That's what's going on inside the Shanghai. Let's go take a look at the DAX and the Nikkei and the FTSE. If we take a look at the DAX here, just a sideways trading range inside the DAX. Now, the DAX here running into the rising price channel coming off of the lows back here in September of 2011. So, not really a big deal out there. Let's pull this back a little bit. Let's put this on a weekly chart, see what the DAX is doing. So the DAX here on the weekly chart is above its 1 to 1A to B equals CD. That was coming off of the lows there in 2009. 89.84 is a number. It's trading at 91.94 as we speak. Pull this back even further. Let's take a look at the next projected area for the DAX, about 10,078. Now, if we take a look at expansions, this is coming off of 2007 down to the lows here in 2009. You'll see about 93.90 is the 1.272. That would set up your 1.272 butterfly potential sell signal. Right now it's trading at 91.95 on a daily chart, though. No reversal signs or anything like that inside of the DAX as we speak. Let's go see what the FTSE is doing here over in the UK. The FTSE here, this is the weekly chart, just struggling to try to get over the resistance zone. And it's a strong resistance zone, so if it does get over that level, meaning about the 67.54 range from July 13th out there, that should act as some pretty good, strong support. That level is 67.54. Right now you're trading at 66.79. It's a weekly chart that we're looking at on the screen, but it just so well displays that resistance line, that black horizontal line, going across my screen. The Nikkei, last night that was down just a bit. Let's go see if there was any damage done inside the Nikkei. The Nikkei has broken out of a nice little consolidation that it was traveling in. This consolidation took us back into the early part of September, and you can see that the full consolidation move ought to take the Nikkei up into about the 16,000 area, maybe right around 16,000. Yesterday's move out here, this sideways move. I don't have volumes on this, but this has broken above the resistance from July 19th out there. So that's on the Nikkei. Let's take a look at some of these stocks here that are moving inside the marketplace price line. That is off to the Mars, I suppose. It's up $37 right now. Probably was able to use its own system and buy a relatively cheap ticket. We've got Netflix. Let's go see what, let me see percentage-wise here. There were a couple of stocks I wanted to look at. Maybe they were to the downside percentage-wise, or they've disappeared from my screen. Let's take a look at Energy Transfer. ENETE is the ticker symbol out here. So let's take a look at Energy Transfer, ETE. Now we're going to go take a look at Home Depot when we come back from this. Boy, wide price spread on this equity here, and a decent volume behind this move. Energy Transfer, ETE, it is trading out at $74.33. Energy Transfer, let's see, what do these guys do? They are provide diversified energy-related services in the United States. Doesn't tell me a whole heck of a lot. In any event out here, volume today is 1.3 million shares and wide price spread inside here. I don't really see any news on this. Were they out with any numbers? No, I don't see any news whatsoever. Let's pull this thing back, see where it might be headed to. One thing is for sure, if this ever does fall out of bed, it's a dangerous thing because it's got this really high volume bar, 9.6 million shares back on June the 21st at around the $53 $1.11 area. Right now, it looks like it's off to complete an A to B equals CD. We'll use that swing point low out there. Our B point we're going to use is August the 8th, and our C point is going to be down here on September the 24th at about 61.50. 1-to-1 is at 76.78. It's traveling at 74.35. Should have no problem completing that move out there. But, boy, if this thing ever does have some bad news, look out below, because $53 or so is where it is likely to head to. But I'll come back and take a look at this screen out here, because we've got a couple of stocks out here on the move. Well, Home Depot yesterday out with numbers out here, and Home Depot tried to break this consolidation. This consolidation is from a range of about $72 at the low. The high is right around $80. So you were calling it an 8-point consolidation range, but it broke above it with some good volume yesterday. Volume was 12 million shares, trying to take out a swing point that only had 5.7 million shares, but closed back inside the consolidation. You know what that says in the case of Home Depot? It really could come all the way back down to the bottom of the consolidation in that $72 range out there. Was not able to break it down. It also says that high should be tested here, because you got another high volume high out there at the price level about 82.27. So it does say at some point Home Depot will be back up into that range, but not being able to break that consolidation yesterday was not a bullish sign for Home Depot. Lowe's, I think, is pointed a bit lower here this morning. LOW is their ticker symbol. They're trading down about 4%. So let's go check in on Lowe's and see what it is doing pattern-wise out here, gapping down this morning. Let's go see where Lowe's is likely to head down to. Now, the stock chart looking pretty good up until this morning, and you now have some volume off of that high. Gap down with 8.4 million shares. 3 trading sessions ago on November 15th, it did 10 million shares. So volume off of the high, taking out a swing point now to the downside. And that was a swing point from November the 8th. That says that what Lowe's should do is come all the way back to its breakout. Now, the question is going to be, is it going to come back to the top of the gap or the bottom of the gap? The top of the gap is the breakout session, August 21st, 30 million shares out there. So if volume can dissipate, then it won't be completely damaged stock. It'll just be a stock that would likely set up a consolidation zone out here. If it can come back and, you'd like to see it actually come back and test the breakout area, which would be the prior session, August 20th out there, right around 43.52 would be that low. And ideally, it would come back, it would test that area, do it on less than 10.2 million shares. Really, the benchmark, though, is certainly the following trading session of 30 million. But you'd ideally like to see it get back on lighter volume than the actual prior breakout session. I don't know if that's a good term, really. You'd go back even one candle further, which would be August the 19th with 6 million shares. And that would be nice if you get back there, less than 6 million shares, and then get some type of bullish reversal signal, some type of sign of strength off of that. And, of course, it really depends on what happens here, because we've only been trading for an hour and 20 minutes, and Lowe's already has 8.5 million shares versus that breakout with 30 million shares. So that'll be key. We'll come and take a look at Lowe's here tomorrow. You got United Airlines, UAL. That is has a potential butterfly pattern out here. Today's session, though, a little bit of profit taking, but yesterday gapping up with 16 million shares, taking out everything with volume. Right now, we've got the Dow's up 14, S&P is up 4.5. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 12 points right now. S&P is up 4. And, the most bearish signs that we have inside the market as we speak right now really coming from the Russell 2000. Now, the Russell 2000 today is trading up about $4. It's trading out at 11.0530. If you're watching us on Tiger TV out here, I've got the weekly chart for the Russell up on our screen here. Now, inside the Russell, we had on the weekly chart, we had a big bearish engulfing, evening star reversal formation. Let me see here. The high also, I want to check this out. The high the week of October 25th was 1121.90. Did we get above that? 1123. We did. So you had the week here, trading session of November the 1st out here inside the Russell. We had a bearish engulfing candle. That means it engulfed the entire session from the prior week out there. You had an evening star because it was able to get 50% or more of the way inside the bar from the week here of October the 18th out there. So a nice big reversal signal, both a 3-week reversal session as well as a 1-week reversal session out there. And you had a key reversal bar or key reversal week take place out here. This has moved into the zone. Now, this is a weekly chart that we're looking at, so this has moved into that cautionary zone, utilizing my momentum trading strategy and system out here. This says a close below this week of 1095.30. Actually, this cautionary zone will start to slip into a sell type mode out there. So watch that on the Russell 2000. That is the weakest sector versus the Dow. If we go take a look at the Dow here right now, which used to be the weakest, the Dow Jones has broke out of that consolidation level. Now, we saw the Dow just move slightly lower yesterday, or higher yesterday, but the transports, that was a different story. But if we do take a look at the Dow here right now, it's still in the strong bullish camp. This is the weekly chart. Let's switch over to the daily chart, see what it looks like on a daily chart. I'll go back to the weekly chart in a moment. If we take a look at the candles that formed yesterday, a high wave candle out here. In fact, you've got really another one if it closed like this today. Now, high wave candles are not reversal signals at all. Just simply means that the market has lost its way. Now, when a market's moving higher and it's lost its way, especially after it's broken out of a consolidation, it have to make you say, something to think about out here. Now, support for the Dow right now has got to be this bearish engulfing candle from November the 7th. That's out at a price level high of 15,797. You're trading right now at 15,982 as we speak. So 15, I said, 15? Let's see what the weekly chart has for us. So 15,797. If we switch over into the weekly chart out here for the Dow, the weekly chart says, okay, where is it? This bear sash candle all the way back here, the week of August 9th, 2013. The high there is 15,655. So that becomes, there's kind of your range for support with regard to the Dow. Likewise, if we took a look at the transports, though, I didn't look at them closely yesterday, but let's look at them right now. Dow Jones Transportation Index, here we go, and let's see what it is doing. So here's the weekly chart, still in nice, strong, bullish mode out there, giving us a little bit of a dark cloud cover forecast at the moment. But again, a lot of time left in the week. We're not even through the mid-session of hump day out here. But let's switch over to the daily, see what kind of signal, if anything, we got yesterday inside the transports out here. You know, just that cautionary mode that it has hit. Folks, it is Wonderful Wednesday, and you know what that means. That means that our man Basil Chapman, he's up next. Following Basil, we got Wednesday, it's Larry Pesavento. After Larry, we've got Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. So have yourself a wonderful Wednesday, and I look forward to seeing you soon. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.